Chris Teeter of CWT Consulting is changing the name of the company to Independent Life and Annuity Agent. He writes what's right for you. And as he likes to say, don't buy a policy with a plan. Chris, appreciate the opportunity to talk with you for a while this time around. And one question that I'd like to start with is, how in the world did you get into life insurance to begin with?
You're not going to believe it, Bob, but somebody pointed a gun at me.
Good try. Now let's get to the truth.
Well, it is the truth.
That is the truth.
I was selling money, doing heavy equipment financing across the country, and when in 2008 they bailed out the banks, you couldn't lend money to anybody. So I had experience with inspections. So there was one of the inspection companies offered me the opportunity to help people mitigate their mortgages. Remember when every third house was being foreclosed on? Well, I went to those houses and I would offer people the opportunity to move their unpaid mortgages to the back of their mortgage, cut their interest rate in half, and then they would receive the offer to make their first payment 3 months later. And I'd make $100 a pop, and I'd do a couple a day. Well, I went to a house that was straddling the Mason-Dixon line, which is interesting because the guy paid taxes in 2 states. But what happened to me was he answered the door pointing a gun at me. And he said, "You're from the bank." I said, "No, sir, I'm not." I have my hands up. I said, "I'm just going to give you a card, and it tells you what to do. Just call the 800 number, let them know that you're interested in their offer." And he said, "Wait right here." So I waited right there, and he came back, no gun, and he says, "They did what you said." I said, "Yeah." He said, "Well, you like helping people." I said, I do. He said, "You should get into life insurance." And I said, "I thought I was going to need it." And when I went home that day, I Googled how to get your license. And for the next 3 months, I studied and passed the test on the first go with a 97 score, which apparently a lot of people don't pass that test the first time around.
That's a great story.
That was a long time ago.
Well, but yet it's one you'll never forget, especially having a gun pointed at you. You talk about the different types of approaches with insurance policies from a perspective of agents. You've got what they call a captive agent. You've got what they call an independent agent. Can you give us a description and the differences between both of them?
Sure. I was a captive agent with Baltimore Life for 7 years. I was a top 10 agent for them. And when you're a captive agent, you can only write, or what other people say, sell their products. As an independent agent, well, the way I became an independent agent, I got rear-ended on the highway, lost my hearing and my balance, went out on disability, and my wife said, we're walking around this farmer's market, and my wife says, "Hey, the phone's ringing off the hook. You have that. Don't just buy a policy with a plan." And you have clients that want to retire and trigger their life insurance and annuities, and I don't know how to do that. So you're allowed to make some money on disability. Why don't you get a booth? And I heard, why don't you get out of the house? So this is my 5th year at the Markets at Hanover. I'm a local resource, but I'm licensed all over the country.
You specify in your products whole life insurance and some various aspects of that you do differently than a lot of your colleagues in the business. That's very interesting. Things like high cash value, limited payout, things like that.
Yeah.
Let's hear more about that.
Hey, Bob, do you like making payments?
I don't like making payments. I don't think most people like making payments.
Well, it dawned on me one day that when you're writing life insurance, most agents are selling on price. And the only thing I sell is concepts. Conceptually, you can pay till age 100, or you can pay for 10 or 20 years and the policy will continue, but you have no more payments. And when I started offering that to clients, I said, "Hey, Bob, do you want to? Let's stop the payment in 20 years." And I remember when you bought your policy, you said, "No, that's a term policy." I said, "No, that's not. This is a whole life policy where the payments stop, but the policy continues, and it continues to grow. The cash value grows, and the death benefit grows." So those things set me apart, and I can usually fit that type of an arrangement into most people's plan. Now, I know your next question is going to be, you say you write what's right for me, and I trademark that, right? Well, you know why I trademark that? Because in order to call yourself a financial advisor, right, or a fiduciary, you have to hold a Series 6, 63, 73 securities license. You know what a security is? It's a stock. Are stocks secure? No, they're not. They go up and down.
Good point.
Yeah, if you have the time and you're in the stock market, it always goes up. That's what they'll tell you. And yes, I do have money in the market. However, which is a long but, right? However, to set myself apart, and because I do write what's right for people, I trademark that, right? Now, as an independent, I will look for the solution for upwards of 100 of the top carriers in the country to solve people's problems, right? And no, it's not always about a death benefit. And frankly, I write very little final expense. Although everything I write can be used for final expense, it's mostly high cash value, whole life, where you can literally use the money and for anything you want. I paid for puppies with the cash value. I paid for a roof on my house twice. I paid for 2 engines, a transmission, plane tickets numerous times, cabins in Maine, other aspects of vacation, paying bills, a lot of medical bills that I had after the accident, and recently an RV. So if you plan and you can stack your policies, stacking policies means having more than one, and I'm not talking about your term policy that's part of a group plan for your benefits plan at work. That will go away. Only 2% of those policies ever pay out. So you should always have a separate whole life policy, and if you do it as a limited pay, you'll be happier.
What do annuities have to do with what you're talking about? And what are annuities for the folks that don't, they only know the word, but they don't know what it means?
Okay. Annuities come from life insurance companies. There's one kind of annuity that's called a fixed annuity, and that's very similar to a CD at the bank. You put your money in the bank in a CD, they hold that money for 6, 12, 18, 24, 36 months, and they give you little dribs and drabs of interest from 0.5 point to 1.5 points, right? A fixed annuity is just, it's going to be held for 3, 5, 7, 10 years, and they give you more interest, right? That's completely safe. It's a contract. It will do exactly what it says, and at the end of the contract, you'll have exactly the dollar amount that it says you'll have. Now, another kind of annuity is fixed indexed. Fixed indexed annuities are tied to an index in the market, meaning that the insurance company will take their money and invest in the market, and when they earn money, when the stock market goes up, there's a par rate. You might have heard that term. It's the amount of participation you have. And if your participation rate is 100%, you're going to get 100%. If the market went up 10%, you're going to get that 10%. But if the market goes down, you don't participate in the losses. So I specialize in moving people's money out of the market or out of a 401k, which is usually in the market, and other retirement plans, move it out, and I can get people a 10 to 12% bonus on that money. So right away, you made 10%. Now that's a fixed indexed annuity. There's another one called a variable annuity. Again, a variable annuity requires a securities license. I will not have one because I won't put it in people's money where they can lose any money. So you won't hear me talking about them because I can't write them. Okay?
So fixed is where you're going. Variable is something you do not advocate or market because of the reasons you just mentioned. So a high cash value, a limited payout, whole life annuities, pretty good overview of what you do. And what are some other things you'd like to say here in addition to what we've talked about?
Well, we're CWT Consulting LLC came after my injury and disability, which those are my initials, right? The keywords don't show up in searches, so I changed it to CWT Consulting LLC, doing business as DBA, Independent Life and Annuities Agents, because I have other agents now working with me. But there's one other thing on annuities I wanted to tell you. Fixed indexed, and variable are all deferred annuities. Okay? There's another type of annuity called a single premium immediate annuity. That is where you get a payout. So throughout your whole life, you're supposed to be saving. 401k was invented back in the 80s, and it was created so that they would get away from pensions. But you save this money, and that's called accumulation. And then at one point you retire, and you flip a switch, and now you're in payout, or what we call annuitizing your money. Well, for every $100,000 that you save, it will pay you $500 a month, more or less. Most carriers are very close to that. So if you had $400,000, you got $2,000 a month coming to you for life, your life and your wife's. Okay, and just keep living. As long as you live more than 15 and a half years, right? It's all interest after that because your money's gone, right? But the insurance company's contract says that they will continue to pay you. The only annuity that you can lose money on is a variable annuity, because that is in the volatile stock market.
Anything else you want to add? I think that covered everything.
Well, the one of the great things is sitting in this market, I'm a resource for the local community. I'm licensed across the country, and I am a proud sponsor of Ultimate Old Age Radio.
Appreciate that very much. All right. If there's nothing else, I'm going to shut this off.
Okay.